welcome to the Mortgage Minute for June 16th. We haven't spoken to you for a while, but there are lots of things going on in the market, and we got some exciting news coming down the pipe. First of all, let's take a look at some of the headlines from the past week. Here's one that's of interest. Of course, as you know, the Bank of Canada has held steady on rates with no change in the past month. Again, well, past 5 years, let's face it. And the Bank of Canada Governor Stephen Pulitz again was suggesting that there was focus on disinflation, and got a lot of flack for that because others were saying, hey, you know what, with inflation hitting 2%, the Bank of Canada should start consider looking at increasing rates. But so far so good. They're not going to increase rates in the foreseeable future. And one of the things that might be a monkey wrench in the whole thing is this: Chinese banks threaten the Canadian economy. Now, this, in my opinion, is an absolutely critical thing to watch coming up. If there's a collapse of the what they call the China's shadow banking system, that would entail that there could be some economic upheaval in China. We have such a large, with the collapse of the U.S. economy, collapse of the European economy, the dependence that Canada has had on China and India, you know, the BRIC countries, Brazil, Russia, India, China, that were actually bolstering our exports and therefore keeping the Canadian economy buoyant. That has been a critical component to the reason why we have Canada has not slid into the recession like other countries. So keep an eye on this. This is something we're going to be keeping an eye on in the upcoming months. In the meantime, this was something that was interesting. I was looking at the Canadian pension plan, and of course, this has now grown to a $220 billion plan. And the gentleman who basically oversees the whole plan is Mark Wiseman. And he said, in his 15 years as a professional investor, this is by far the most difficult market he has ever seen. Well, this gets interesting because you know what? There's a lot of talk of where people should be putting their money today. Stocks, bonds, mutual funds, real estate investment trusts, mortgage funds. The point is, right now, when we look to the price to earnings ratios, is it a smart thing that does it make sense for people to continue to put pension funds or your RSPs into the stock market? I would argue that right now is not the best time. Does that mean you should become a landlord? Perhaps, maybe. But maybe there's some alternative investment vehicles that you might want to look at as well. Mortgage funds. There's a lot out there right now, but more important than any time in history, I think it's critical that you're sitting down with a professional advisor that can take a look at your overall financial picture and analyze to what degree real estate should be playing a role in your financial plan. And folks, I can't emphasize enough, this is the time to start looking at that. And we've got some very exciting news coming down the pipe here in the next month or so that I'll be sharing on future versions of the Mortgage Minute. But for now, I'd encourage you, if you're sitting there right now analyzing your own pension fund, RSPs, whether you should be putting money in real estate, stocks, bonds, mutual fund, whatever it is, feel free to give me a call and let's have that conversation. Happy to offer a free consultation on those topics. In the meantime, that is the Mortgage Minute for June 16th. Hope you're having a great start to your summer, and we'll talk to you soon. Go to peterkinch.com for more information and contact us for your free consultation. Thanks.